Bank of Kenya, and Pithon Mutiga, I should correct that, not Mutiga, Mutiga, who is also heading the SME lending section at Family Bank. Gentlemen, welcome to the show.
Thank you.
Someone else will be joining us a little shortly. And just to initiate this conversation, there was a landmark development last year, if you remember. After 3 years, we had the repeal of the law capping interest rates, and this was really touted in many spheres as a strength, especially for access to credit by SMEs.
Yes.
How have you seen it evolve, if I could start with you, Maurice?
Yeah, through the Finance Bill 2019, where the capping was since changed and it was removed, we have seen some effect from internally within the bank, where we have looked at the risk analysis that we have been doing before, because now the risk cap is no longer there. And we have strategized around it to see how we can be able to assist the SMEs within the country. We have also seen the customers responding to it. They are becoming more bold and coming to the bank and seeking for financial assistance. Whilst we know very well that most SMEs, their biggest challenge is usually access to credit. Yeah. We have responded to this in different ways. Currently within National Bank, we have come out boldly and said that we want to step into the unsecured space. What I mean is that we are trying to respond to our customer needs. Most of our SMEs in this country, they have told us enough times that lending on security has become a big challenge to them. Yes. And we have found a way around it, and we are currently saying that we have appetite to lend to SMEs up to a cap of 3 million shillings.
Unsecured.
And which is totally unsecured. I can confirm that. Okay. Yeah.
All right. And Pithon, just to get your introductory remarks around how the situation has evolved post-rate caps.
Thank you, Julius, for having us. I think I echo what Madama says. The removal of capping has really increased the appetite of financial institutions to these SMEs. And even the financial institutions have become more innovative in providing solutions that can cater for the unsecured part of it, the people that doesn't have collaterals. And I think you have seen even at Family Bank, whereby we are able now to go to the micro and the very small SMEs, VSMEs, that we are able even to go to up to 5 million, whereby we have partially secured and maybe part of it unsecured. And this has shown that the banks have now confidence in SME, and we expect the growth of SMEs this year to be more because of the confidence that the banks have with them.
Okay. And speaking about now the entry of unsecured lending, not really entry, it has been there, but just to try and make it more robust. Yes. How do banks cushion themselves? Because from the sentiment we get, the private sector is still having a bit of challenges in terms of performance. Yes. How do you ensure, especially with the strict provisions being prescribed by IFRS 9, yes, which is the reporting standard, how do you ensure that when you're extending unsecured lending, especially to SMEs, yes, that you are not leaving yourselves extremely vulnerable?
Okay. That's a very good question. What we have done is that we are walking the journey with the SMEs in this country. We have had enough discussions with them, and we know where they are struggling. One of the biggest challenges that makes our NPL go off is because of lack of knowledge from the business customers. What do I mean by this? Is that when they are running their businesses, they do not understand the triggers. And what we have done as National Bank, we have gotten into partnership with companies like Grant Thornton, who are specialists and authority within the audit and financial management experts, where we have gotten into a partnership and we are doing trainings to SMEs just to make sure that we lift their capacity, we lift their knowledge, so that when they are running their business, they make sure that they do the right things. And also, they also look at the management structures. They need to have structures in place to make sure that the business can move towards the right direction, so that by the time we are financing them knowing very well they are going to do the right things.
Okay. Before I get to Mutiga's reply on that, let me just cross over to my colleague Okusa, who is standing by in Kisumu, I believe, to give us an update on what is following up today. Okusa.
Thanks, Julian. Of course, we are following quite a number of stories down here. The first one being a strike by health workers in Kisumu. Actually, there's a stalemate between the medics and the county government of Kisumu over delayed payments. This started, actually, the all downing of tools began last week when the medics staged some sitting at the Kisumu County headquarters demanding their salaries for January. And of course, that has been going on for the better part of last week and even this week. So we'll be keeping an eye on that. And again, at the courts, we have the former Member of Parliament for Game, that is Jacoyo Midiwo, who is supposed to appear there on accusations of not remitting tax to the county government of Kisumu, that is the Ministry of Tourism. So that will also something that we'll be keeping our eyes on at the courts. Remember, yesterday there was also another court that is in another case, sorry, that is in connection with the former Member of Parliament Jacoyo Midiwo after 4 police officers who allegedly assaulted him 2 weeks ago were arraigned and pleaded there for took a plea at the courts. That was yesterday. So today again, the former Member of Parliament will be there at the courts for this particular case that I've just mentioned there for failing, according to the Kisumu County Government Ministry of Tourism, failing to remit tax. So that is something we'll be keeping one eye on. And then finally, in the neighboring Vihiga County, the MCAs, that is the members of the county assembly there, have threatened to impeach the governor, that is Governor Wilbur Otichilo. And we have managed to secure an interview with the governor just to tell us some of his feelings regarding this particular development with the MCAs who are accusing him of abusing office and at the same time accusing him of gross misconduct. Whatever they mean by all that, we'll be able to find out when we get to Vihiga later on today. So those are some of the 3 key stories that we'll be following up for our viewers today, and of course anything else that will come up as the day progresses. Back to you, Julian.
Many thanks, Oko Kusa, for giving us that update from Kisumu. Definitely we'll be following up those stories for you. Before we crossed over to Okusa, we were discussing the issue of how banks cushion themselves against the risks associated with unsecured lending. And we've gotten some very good views here from Morris here. Mutika, what's your reaction to that?
My reaction to that is that also the banks have come with many superior solutions, especially on supply chain financing, where we are able now to do the aggregation model in a way that you're able to work with the anchor corporate to be able to ring-fence the money from the side of the buying and the side of the selling. Another thing that we are doing also at the banking is that we have some partnerships with Africa Guarantee Fund, which can be able to guarantee for 90% of all the trade solutions that we're offering to SMEs, and then the customer is only able to pay about 10% in cash margin. So all those come to support the SMEs because of lack of collateral. At the same time, there are those that we feel from micro we lend to them up to a certain amount, then we graduate gradually. Like in Family Bank, we have Biashara Boost loans where we start with 1 million unsecured. As you pay that 1 million, you're able to graduate you to 2 million, 3 million. Maybe sometime in the midway, you might require some part secured. And through that, you're able now to gain the confidence and you're able to get to finance to that sector.
Okay. And I want to come to Morris, and one of the issues that emerged from the conference yesterday is that there is a perception, and I'm deliberately using the word perception, that SMEs are broadly high risk. Is this perception, is this fact, or how is the landscape like? Because I remember covering a particular bank releasing their financial results last year, and when I asked about the NPL performance, because the non-performing loans had really grown, I was told it's because of one particular large corporate. So I went on to ask, is this then not contradicting what we always think, that whenever we see this NPL surging is because of the SME side?
Yeah, when we look at the risk, in any business there's usually a risk, and it's just for us as National Bank to decide what risk appetites we have and how we are going to mitigate that. And I would not want to balkanize all micro and SME customers that their risk profile is very high. It depends from one business to the other, and also depends on the industry that the customer is playing into. For us as National Bank, we are aware that we have risks within SME, but now the issue is how we can be able to mitigate the risks. Because what we would like to do and we are currently doing as National Bank, is to give solutions rather than products. If a customer has won a tender somewhere, like for a corporate, and needs to service that tender, it is as much as there is risk involved, it is how we go around it to make sure that we can sign MOUs with these corporates to mitigate the risk. And then at the end of the day, the lending is done and the SME customer is happy. We are aware these risks are there, but we are finding ways to mitigate it, rather than just balkanize SMEs and say, this is a risky business to be involved.
Okay. Before I get Mutiga's views on that, I want to welcome George Bodo to the set. George Bodo has been heading up the research segment of various banks for quite a while and is now Chief Executive Officer of Call Street Capital. Welcome to the set.
Thank you.
Mutiga, your views on the issue of credit profiling, the risk profiling rather, sorry for that.
Thank you, Julius. I think I look at it differently. Instead of looking at it as a risk, I look at it as a challenges that SME are having. And when you are doing the appraisals, these are challenges that we are trying to solve. And one of the challenges that I know happens to all SMEs is managerial know-how. You'll find that these people who have started their business maybe 1 or 2 years ago, they don't have enough experience, and maybe they make some mistakes here and there. The other challenge they have is bookkeeping, that you're not able to get enough documentation to make a credit decision. So when you're doing the decisioning of facilities, you'll find that the records are not in good order. They are not as prescribed on the accounting concepts. And also you find that there's no financial planning in the business for the SMEs. So some of these is the work we are trying to do as Family Bank. We are trying to solve them by trying to bringing all these SMEs in business club, whereby you can be able to be training them on financial management, on financial planning, on bookkeeping, and also on HR management, so that they can be equipped with these skills so that in future they're able to access credit easily.
Okay. And George, just to bring you on board here, Mutiga is talking a lot about the investor readiness of SMEs, which has been identified as a key challenge. Just what do you feel can be done to scale up the capacity of SMEs? Because many will approach you even in terms of seeking financing, not necessarily from banks, but maybe it's an equity stake or something. But the amount of work you have to do in transaction advisory is quite something.
Yeah, before I answer your question, I think if you look at the market financing architecture today, it's more bank-led, and that's why we have two bankers here, because banks tend to dominate the financing market, and it's a structural issue for the market. And just to give you a bit of statistics, there's a survey research that was done by the FSD in 2015. I think it was commissioned by the Central Bank of Kenya. And it had some very interesting revelations, actually, that SME financing, first of all, it questioned the definition of SME, because today's definition of SME varies from bank to bank. A number of them define it based on annual turnover. Well, a proper definition should include a number of things, including the number of employees.
That's correct.
But the second other aspect of the research was that commercial banks actually, in terms of SME financing, the mid-tier banks and the tier 3 banks are the ones with the largest exposure to SME finance. Some of them as high as half of their books are exposed to SME. But what is the biggest product? For some of the mid-tier banks and the tier 3 banks, the biggest product they're pushing to SMEs is overdraft. So essentially, there's an element of short-term financing that goes into SME financing, especially from the banking sector, because it's a bank-led architecture. But the question which you're raising very critical is, how can we expose SMEs to capital markets, for instance, so that they can get what I call patient capital, which is only from the capital markets. And it goes back to the investor readiness which you're talking about, which I personally have done a couple of it on helping SMEs become more investor ready. But I feel like the commercial banks can actually help SMEs a lot, because commercial banks play a very critical role in any financial market. And one of the critical roles they play is what they call the risk screening, the better risk screening than the capital markets, because they have access to a lot of soft information from SMEs. So they could actually help with soft screening of SMEs before they transition to the capital markets. Yeah.
George, I want to hang on to something you've mentioned, that definition of SMEs varies from banks to banks. I would wonder, and I'm not a banker, I'd wonder why this is the case, because the SME Act, which came, I think, in 2013, has a very clear definition of these various categories, the micro, small, and medium-sized businesses. Why would we have variations? And maybe to get your views, why would we have variations across different banks?
Okay, within the banks, we create different portfolios. And within the portfolio, like for National Bank, we have micro. Our micro preposition, we have determined it from a lending perspective. We would lend up to 5 million. Because what we are looking is the profile of that micro customer. For him to or her to graduate to an SME, he needs to have, better structures, the cash flows for the business, now moving above 10 million, 20 million, 300 to up to about 300 to 500 million, where we move from the cap of 5 million for micro, we get to SME to a cap of lending of 150 million. Okay. It's just a way of profiling so that also management can be easier, and characteristics of those customers are also very, very similar. Then after that, we get into corporate.
I see. Mutiga?
Yeah, I think all the banks have different definitions of SME, and also based on the size of the bank, you'll find that Tier 3 will call an SME maybe corporate, and a Tier 1 might be calling a corporate corporate, and to you, Tier 3, you have never had such a customer in your books. So depending on the turnover, which is the acceptable criteria for classifying, Family Bank, we classify any business with a turnover of not more than 5 million as micro. Yeah. And also from 5 million to about 50 million as small. And from about 50 million to 100 million per year, a new turnover, we classify as a medium enterprise. All of them can be able to access any amount of money depending on the needs, depending on the repayment ability.
But it has to be secured?
Not really. For small and micro, we have unsecured loans,
okay,
up to 5 million, okay, graduated. And this is we call Biashara Boost loans, and one of the best products for Family Bank across the country, which caters for all the sectors, agribusiness, asset financing, working capital, and all customers have been able to access this unsecured part of it. And also, when they graduate to medium, you'll find that most of the business now start getting assets that they can be able to pledge the bank as securities. So we continue, we graduate them, and as we also get some securities. And I think the definition maybe from now the large or SME is what we call corporate. Yeah. And I think those are businesses that have a turnover of more than 100 million per year, okay, which are well structured, well organized, with good governance structures and well bookkeeping. Okay.
One of the key challenges highlighted by the Kenya National Bureau of Statistics as far as SMEs are concerned is the issue of mortality. And the statistics indicate that as many as 65%, or 65 out of every 100, never live to see their third birthday.
Yes.
So from a banking side, and before I get to George, I'm curious to know, when you're extending your credit, how do you play into this space of, it might not be beyond 3 years in terms of the tenor of the loan, because now that becomes a very critical aspect in, with regard to the kind of facilities they can access.
That is very true. We have seen research telling us most businesses do not go beyond the second year in business. And this is because, one, of lack of financial discipline, financial literacy, lack of proper bookkeeping, and some of them do not even bank appropriately. So due to this, we have found that most businesses take up very well, and then they end up within 2 years, they are closing shop. When it comes to lending on this category of SMEs, we impress upon them to start banking with us even before we lend to them, and they start accessing credit after 6 months, after we have seen how their banking is ongoing, and we see what kind of strategies they have to make sure that they go up to beyond 2 years. There are others, depending on how much you're borrowing. If you're borrowing more than 5 million shillings, we'll consider you to run your statements bankings for about 2 years, so that you can also be able to check what kind of trends are going on within that specific business.
Yeah.
And thereafter, as I mentioned earlier, we are determined to make sure that these businesses do not close just after 2 years. We have partnered with Inuka Enterprise Fund, where we have scheduled trainings all over the country to make sure that we can impact our SMEs with capacity to sustain them within business, making sure that their key needs, if they are lacking marketing skills, we make sure that we hold them on that. If it's a bookkeeping needs, we make sure that we also embrace the need for bookkeeping, because what we have realized is also sometimes they do not understand why banks ask for these things when they want to access credit. But immediately they are able to pick that, it becomes an easy go for them. And also within National Bank, we have the National Bank Business Club, where we run similar trainings independently, branch by branch. Even before customers come to borrow, we give them the needs of why we need to make sure that we have financial discipline, and we lead them on how they can be able to access credit without much problems.
Okay. George, this issue of mortality of particularly SMEs, what really is the underlying problem in your view?
I think fundamentally, a number of SMEs don't solve problems. So, and I always say that entrepreneurship is about solving problems. Over the last 10 years, in my assessment, a number of SMEs operate like sort of a tenderpreneurship, county contracts, national government contracts, to the extent that when some of these things die down, or some of these projects are deprioritized, the SME essentially dies. And you can see that with the pending bills. The banks have been suffering with the pending bills. And it's fundamentally because most of these SMEs operate within a segment that, in my assessment, don't create value. If you're, for instance, yesterday I was watching the Minister for Internal, sorry, the Cabinet Secretary for Internal Security's comment about the prisons spending bill. It's almost like you can see there's a lack of knowledge on some of these things. But to answer your question, for me, I think SMEs that solve problems live a bit longer. And you can see that. I've had the opportunity to work with some, for instance, some of the SMEs that operate in the telecommunications sector that provide infrastructure service. Some of them have been around for some time. And you can see that they actually provide solutions to daily problems. And these SMEs live a bit longer. So I think there needs to be more empirical analysis around some of the issues that cause high mortality rates among SMEs. But you understand that if there's a value addition, a strong proposition in value addition, then you find that the SMEs live longer. But mortality, just to comment a bit on mortality, you can see, as earlier mentioned, that the banks are very aware of the high mortality rates, and that's why they push the short-term financing on as a product. If you look, actually, most of the product they push is actually around short-term financing, asset financing, which is something that evolve around 12 to 24 months. You don't get a commitment that goes beyond 5 years in terms of financing towards. But the bank can play a bigger role in terms of hand-holding the SMEs to live longer, to extend the mortality.
Okay. Yeah. And to stay on that point, what we have seen in other markets, for example, in Nigeria, in Ghana, to address this issue of problems and to ensure that credit is channeled to areas where there's value add, we have seen a prescription of priority sectors for lending. And a very recent cases in Nigeria where we've seen that. Do you feel, Mutiga, that this would be an approach where the government actually says, and I remember when I was reading the draft BBI report, not that we want to get into politics, but I actually saw that there was a prescription that perhaps lending should be guided by priority sectors prescribed by the government. Do you feel that would be perhaps a way to ensure that this credit is funneled where there's the highest value add?
I think the government may not be able to push to regulate the sectors that we are going to lead. Or maybe what they can do, the government, is to create an enviable environment for each and everyone to operate for all the sectors. And I think that is what is happening in the SME Expo. You could see yesterday, everyone was talking about the challenges of many licenses, many taxes to this SME. But maybe to add on what my colleagues have said on the mortality rates, I believe also there is some social pressure when SMEs they start a business. You find that they are looking at their peers, how fast they have grown. They become impatient. They will not want to go the whole cycle, maybe to operate for 1 year so that the a financial institution can come and be able to make a decision on financing. So you'll find some of them going even to Shyrocks or those unregulated informal money lenders. And maybe they lend maybe at 15% per month, which comes to about 180% per year. So you'll find that by the second year, because he's operating only to pay the interest on this loan, he's not able to start on his feet. But I believe at Family Bank, we have tried to handle customers, especially these SMEs. We usually organize monthly and quarterly seminars, so business clubs. We have one tomorrow to train them on human resource management. We also try to advise our business bankers at the various branches to hold sector forums. Like tomorrow, we'll have a sector forum for all the clearing and forwarding agents on Mombasa Road, trying to address their issues. We also may be meeting maybe all the dealership for Safaricom. We also be meeting others maybe in the oil marketing companies to see what are their specific needs, because we find each and every sector has a unique problem that we need to provide a solution to solve. Okay. So I think the key thing as bankers, we need to focus on them per sector, to try to give solutions based on the challenges they are facing on each and every sector, instead of having solutions for all entire sectors.
A blanket, I see. Yes. I see. And to get your views on this, would priority lending perhaps by sector be a way out here? Yeah,
so for us, we know very well that the Kenya GDP 2019 grew about 5.7, trajectory that it will go beyond that. And for us, what we try to understand and study which sectors are growing. And for instance, if you look at agriculture, has been growing, manufacturing has been growing. So again, when you look at also the Big Four agenda for the government, it's almost aligned to the industry sectors that are also growing. So for us, we would like to play as National Bank into the sectors that are growing, so that as the economy grows, we know where the triggers are and we are within the growth trajectory. Okay. So specifically saying that customers who are in businesses that are showing a positive growth will definitely be having more business to do, and they will end up, being able to service their facilities when they come to access credit.
George, the bankers seem to hold the view that this should be left to market to signal where to lend. There should be no prescription from government.
Because our economy is largely private sector driven. Yeah. And consequently, the private sector should actually set the agenda for the government. And I think I find a mismatch in terms of where the government wants, the government's agenda and where the private sector agenda is. And you can see even with the Big Four, today the government is struggling with financing because the private sector is looking elsewhere and the government is looking elsewhere. Look, for instance, housing. The government is struggling actually to meet its annual target in terms of number of houses, because the government, well, they've tried to put in enough incentives for private sector to come in. Yeah. But I feel like the private sector has a different agenda away from the Big Four agenda. And you can see that even the takeoff of the Big Four today, you can actually see there's a problem with the takeoff today. And some of the things, I was looking at the budget policy statements for 2020, and Big Four keeps being mentioned all the time, and I look at the spending priorities, and I think the private sector today, look at where they are and where the government is gunning for in the next fiscal year. There's a mismatch. Yeah.
Okay. And when you look at the budget statement for the last financial year, that is 2019-20, one of the prescriptions and which was executed was to collapse 3 critical funds into one. And this funds particularly targets now SMEs. And one of the questions I normally get from SMEs is that if I manage to access, for example, credit from that particular fund, when I go to a bank, will this be viewed as a plus or a minus? I'm just curious to know what you would think as bankers here, because someone would imagine it would be a positive on their credit profile, someone would think otherwise.
I think, Julian's credit is credit, whether it is being channeled through youth fund, women fund, the bank's money, because the key thing that each and every financial will be looking for is the repayment ability, is the prospect of the business growing, is the past experience of the business, to know whether their money will come back. And I think what we need to do, I think, as financial institutions, and also maybe government and private sector, is to improve on trainings, to upscaling our SMEs. As we are saying here about bookkeeping, about financial discipline, those are things that can be able to make an SME grow bigger, because an investor or even a financial will be able to make a decision on how it can be able to be done to this business. Secondly, let me say that management is a key issue. We find that most of SMEs are family-owned. Decisions are made in the house, in the sitting room, and maybe as the business grows, it requires someone to come from outside and maybe to assist in management, because some pressures of business might require now to get a professional.
Mutike, just to hold you there, because I spoke to a number of SMEs about this particular issue. I raised the same issue, but I was told outsourcing is expensive.
I don't think it is expensive.
Of course, in the short run, it is expensive.
It's expensive in the short run, but you see now the pressure of the business is expanding. It requires more knowledge, more technical know-how, someone who is able even to do strategic plans, short-term and long-term. And this also makes sure that even the financier is able to make decisions on what can be able to be supported. For example, let me tell you about some of these smaller businesses operating in our Juakali sector. You'll find that the decisions are knee-jerk. A person will go on a weekend along a bypass having a good time with friends, and he hears others are going for China to get some goods, and he goes to a Shyrock to get some money to do it. But you can see there was no planning for such an impromptu decision making. But when you have someone to come in your business, assist you in making short-term and long-term plans, even that financing will be done at the right time. Even when you're going to a financial institution, you'll not be asking, inatoka lini, mtanipatia na siku gapi, because it's already in the plans. And that's what we need to do as financiers. We need to be engaging these customers on a daily basis, as I said, in all sectors, so that we can be able to uplift their bookkeeping, financial records. And you know, even now, even the taxman also is levying turnover taxes. Would also like to see the sales records for an entire month, an entire quarter, the whole year. So I think it is important that we upscale our trainings, handling of these customers. And I believe these are the future corporates. In the next 3-4 years, the mortality rate, if you do that, you are going to reduce the mortality rate, and maybe by year 2022, maybe you'll have so many businesses operating here and create more employment for the government.
Maurice? Yeah, when you look at different funds that are accessible for different SMEs, we know most of the SMEs have a lot of appetite to borrow so that they can be able to settle some of the opportunities that they see, because they believe once an opportunity has come across, they need to make sure they grab that opportunity before it moves. So you'll find most of the SMEs are multi-banked, and they are getting facilities from one bank, from the other fund, and they will always be seeking for more. For us within National Bank, we have tried to analyze our SMEs, and going forward, what we are doing is that we are getting to a solution-based. We try to analyze the customer 100%, and we are coming with a customer value proposition where we take up the customer in wholesale, in totality. We understand what their financial needs are, and to see how to progress them from one stage to the other, rather than passing a product. One point that I can put across is, for instance, you see a customer walking in and he says he wants a truck. This is because maybe he has gotten some business contract to distribute, or he has been allocated a different route if he is a distributor, and he is looking for an asset finance. When you go to deep analysis of that customer, you realize the asset finance is just one need among others. Others walk in asking for unsecured facility. When you go deeper, you find that actually this customer needs working capital that will extend beyond the cap that we have of the 3 million. So it's an issue of making sure that we understand our customer needs and we give a solution to them. That way, you will find that they are not tripping into each and every funds that are coming across, and you find that they are strategic and they can be able to progress beyond the 2 years. That way, we have seen most of our customers within National Bank moving from the microspace, getting into SME, and also within SME, what we have done, we try and make sure that we give them exposure. We give them international exposure, like last year around October, we went to Canton Fair. This is a trade fair that happens in China, just to give them exposure of what happens, and the goods that they normally buy from their suppliers, they can end up coming to the bank, getting a facility, and they can be able to import themselves. This way, we move them from SME even to corporate level.
Okay.
So we get into a journey with our customers rather than giving them this fund or this product and pushing the other.
I see. George, I want to come to you and the point which Mutiga raised, that from a number of SMEs, decisions are made in the living room. And perhaps to be fair, and what I just raised earlier, when you speak to a number of these SMEs, they'll tell you the cost is quite considerable.
Yeah.
Yeah, the cost of structuring it in a more formal sense. I'll tell you something as simple as turnover tax, because the first date was, I think, February 20th.
Yes.
And I was speaking to a number of SMEs, and they'll tell you even the process of just filing SMEs.
Yes.
And I know of a number of well-established corporates with huge budgets who actually bring accountants to help them file their returns, which takes a whole day. Consider an SME, which is strained on budgets. How do they navigate some of these challenges, George?
I haven't had an exposure, significant exposure to SME, but I think there's an element of SMEs also being emotionally attached to the businesses. Yeah, they don't want to let decision making go away, right? I don't think it's much of a cost because in terms of decision making, they can actually expand the decision making structures by having, for instance, a CEO or even a COO, or even having an executive committee. It could be a composition of 5 people that run the business.
On a paycheck.
On a paycheck, yes. But I don't think it's, if you compare the cost of establishing an executive committee on decision making, vis-a-vis making the wrong business decision, as he said, alluded to, it's very costly actually. Some of the decisions that SMEs make, and some of them end up making the business collapse. Yeah. So I think in the long run, the cost, I think the education should be that the long-term benefits are significantly higher than you making a single decision in the bedroom and eventually the business collapsing. But I also wanted to touch a question on the affirmative action fund that you were asking earlier on. I think it's poorly structured today. It has always been poorly structured from the onset. Now they've been amalgamated. It used to be youth fund, women fund, I don't know what fund. It was poorly designed. It had a lot of political connotations on it. And I think they could do better. I've always asked myself, why can't, for instance, the Central Bank of Kenya have an SME guarantee scheme that goes to banks, which is equivalent to an on-lending funding scheme that is given to banks. You talked about Nigeria. They have a very, very robust SME guarantee scheme that the CBN actually runs, the Central Bank of Nigeria runs. And this can actually help smoothen out a number of those risks that we're talking about here. Now they're talking about, for instance, the housing. They've established the mortgage bank, the Kenya Mortgage Refinance Bank. You know, they could have a similar scheme for SMEs. But also beyond that, structurally, SMEs need some structure to help them formalize the businesses. Like, for instance, tax filing, business registration. A number of SMEs today don't have a business registration. And the banks have a problem with a number of the SMEs because they don't have structures. So how do you help SMEs to formalize the business? And that's a big issue, by the way. You have SMEs that don't even have a head office. They don't have a website. And the bankers try to push them through. You know, the guy operates from somewhere, you know, his office. So how do you help SMEs operate? And I think it goes back to government policies again. How do you help SMEs to formalize their business? The SMEs today have a lot of burdens, especially imposed on them from the government, including tax. Now, you just talked about turnover tax. They have a significant burden on them. Business operating permits, how many permits they need to operate. Can we uniformize that? Can we standardize that to help them? You know, can we give them tax breaks, for instance? We talk about tax breaks. Can we give SMEs tax breaks? Can you say that if for SMEs with X amount of turnovers, you're exempted from income tax? Because SMEs have an impact on the economy. They create jobs, you know, which is very important. The bulk of the jobs today is. And you looked at the statistics from Kenya National Bureau of Statistics. The latest population statistics, it's very scary, you know. The bulk of 75% of the population is 35 years below, which is very scary. And most of these people are not employed.
Okay. Boris, you had a point on that.
Yeah, my point on the cost of management and consultancy, sometimes it might end up being even more expensive to the SME if they do not cushion themselves early enough. And we have realized this is actually a need for SMEs. And we have gotten into partnership with audit firms like the Grant Thornton, where we are organizing, consultative meetings together with them. They point out the needs of making sure that they do their tax properly, they do their bookkeeping properly. That way we cushion them on the cost.
Correct.
But after they have seen what the consultants are doing, they end up, opening up into the cost and saying, this is a good cost for the business, rather than get yourself into, issues later, which might end up crumbling down the business.
Okay. Mutega, you also have something?
I have something on that because I believe all this we're talking about the cost of accounting, management. It literally first goes to the small and micro enterprises. We find that most of the medium enterprises have these structures.
Yes.
And I believe as banks, we also have a role to play. And I think at Family Bank, we have some SME hubs whereby we call the customers and try to train them on these things. And sometimes we have consultants to train them. And with the time, they get to know if you teach them for one time, second time, the third time, they're able, as the business also grows, they're able now even to get a manager of the business. But having said that, I think as Georgia said, the cost of doing business for these SMEs from the government perspective, both national and local government, is quite high. All the way from the taxes to the licenses. Yeah. Go to a business and you find maybe about 10 stickers on one of the walls. All the licenses. 10 of them. The cost of that may be about 60,000 per year. And this is an SME maybe who's operating on a turnover of about 2 million. So maybe margins about 20,000 after all the costs. Yeah. So you can imagine if you can get those tax holidays, those tax breaks, that SME will now be able to grow further because you'll be using all that spending to grow the business. So I think the interventions is both with us as bankers, the private sector, and also the government have a role to play for us to realize the real SMEs that we need to grow. And I believe if we can be able, as I say, to train these SMEs, if we can be able to have trainings for them on a monthly basis. Each and every bank operates is targeting SMEs. Yeah. Each and every bank, and all these SMEs are multi-banks. You'll find one is National Bank, and he has an account at Family Bank. Yeah. So if you can do a training, maybe through that Inuka program, I do a training as Family Bank, we do on bookkeeping, and Mudama can also do maybe on tax matters, and maybe another bank can do another topic. We can be able to grow and assist these SMEs. I see.
George raised something which I'd like us to discuss from a policy standpoint. Can we give these SMEs incentives, something like tax breaks? And I remember, and why I'll keep mentioning this document is because it is slowly evolving into a policy document. If you read the draft BBI report, it proposed 7-year tax break.
It's actually a policy document.
Yeah, for
it's
SMEs.
a strip of politics.
Exactly.
It's an excellent
It's a policy document. 7-year tax break. And one of the key issues that was raised, does Kenya even have the fiscal space at this particular point to absorb that kind of incentive for SMEs? Yeah. George, I don't think we do you?
Yeah, we do, because look at the economy today. The government has a very aggressive spending plan for, they've always had aggressive spending plan for the last 5 years, and it's even more aggressive this year. If you look at the funding of the budget today, it's fully constrained, right? It speaks to a tax base, a very narrow tax base. We have a very narrow tax base that we continually tax every fiscal year, right? So what do we do? Because we have a narrow tax base, every year we have to raise taxes, adjust taxes upwards, whether it's VAT, whether it's income taxes, whether it's excise, whether it's withholding, Well, why don't we try something different to grow the tax base? Why don't we cut some of those taxes, right? What I call the fiscal easing. Why don't we have a fiscal easing and see if the tax base grows? That's another way for me for the government and policy making organs to look at it. Can we cut taxes and see if the tax base can grow, for instance?
I see.
Yeah, as a way of increasing compliance.
Mutiga, you seem to be in agreement.
Yes, I'm in agreement, and also I think the government can also do more because if you look at the money that goes through corruption, the billions that we hear every other time, if we can lead corruption, if we can be able to be supporting other programs, including that BBI mentioning about, with the billions, why don't the government also set aside a kitty for SMEs? And this can be well administered by financial institutions to these SMEs at a lower rate, maybe at 4%, like how they did in Europe. And I think it all goes back to the government to make some interventions for us to realize the real SMEs that we want to have.
I see. And staying on the subject of formalization, I speak to a lot of SMEs. And I raised this question, why don't you formalize your company? So you have better access to credit and you will have better incentives. But they'll tell you, if I formalize, then I'm opening myself to more taxes, you know, more licenses. Why would I go through the hassle? You know, for them, they're looking at it as a trade-off. Yeah. So they'd rather stay informal.
Yes.
And get their credit from whichever informal channels, whether it's their charm or whatever it is, as opposed to going formal. Do you see this as a key challenge, Boris?
Yeah, it's a key challenge for most of the SMEs, but for us, coming from a banking perspective, compliance is very, very key. Yeah. You need to be structured. And some of those SMEs where you find them fearing to get into some of these hurdles are those SMEs who do not go beyond 2 years. Any good business would not have a problem in making sure that, you know, they register their businesses, you know, they walk tall knowing that they are paying their taxes as responsible Kenyans. Because if you are trading and you are trading well, then taxes is part of the compliance that needs to be met. And that way, if you do a clean business, you'll find also banks have a lot of appetite for SMEs that are, you know, compliant and they are doing clean business. We'll be able to partner with them and make sure that we see them through and through. Because some of these, those issues are what we look at when you are doing the credit analysis.
Okay. George, formalization for them clearly is a big challenge.
Yeah, I think formalization is very important in my assessment. And formalization can actually be as simple as paying VAT returns, you know, every year, because every business has a VAT obligation at the point of registration. And for me, if formalization and the banks do a good job in terms of helping some of the businesses formalize, as I said, some of them don't even have a corporate head office. Yeah. They don't have audited accounts. They don't have a website, which is very critical. People knowing you. But I think at the core of it speaks the fact that some of those SMEs begin as self-employment. You know, someone starts off as self-employment, and soon enough he realizes, oh, I need to graduate too, and they take time to graduate into a business. Yeah. That's one. Also, some of them also don't do very sustainable businesses. For instance, if your core business is supply items to certain section of the government, that's not really very sustainable, because if the government agenda changes, then that business is off. So I think even for banks and other financing entities, it's also to analyze the sustainability of the business. The banks only are concerned about their business aspect, but I think also they need to look at the sustainability of the business that the SMEs do. Is it really sustainable? Is it creating jobs? Is it destroying environment? Right?
Or more like the social impact.
Yeah.
I see.
Yes.
Mutiga?
Yeah, true. I agree with George. It is our duty also as bankers to educate these clients at the need of complying, the need of registering a business, because that one opens you up for financiers, other partners, and even as per today, for you to do a tender. Those are part of the requirements that you need, because for you to start a business, I believe you are starting a business so that it can grow. Yeah. But what we have currently, we have so many small and micro enterprises operating informally. Cash to cash, they are not even bank accounts. They borrow from a kiosk whereby they go and get 20,000, they buy their wares, they sell in the evening, they return maybe with an extra 1,000, which is quite expensive. But if they can be able to to register for the business names, they take the tax certificates, come open bank accounts, we are going to work with them, to scale them on their business management, on how they can grow their business. And as a family bank, because I said we have some forums that we meet all the customers together per sector, we are able now to train them and also to open up them for other peers, peer-to-peer review, benchmarking, and also sometimes once in our twice in a year we take them for abroad trips, whereby they can learn about other markets, what they are doing, and they can come and replicate here. So I think we as bankers, we have a big duty to do on these micro and small ones, and I believe as Family Bank is opening SME hub in Liver Road, in Kenyatta Avenue, and across all the major towns, so that they can be meeting, even these chairmans can be coming to be met in a group, and you can give them advisory, you can give them advice on bookkeeping, on good management practices, and through that, I think we are able to realize even better business from them.
Okay. And towards the run-up of the repeal of the rate cap, there was much talk, and we even saw the document around the banking charter.
Yes.
of course, we have two bankers on the desk, and I'm just curious to know, I know you don't hold brief for KBA, but I'm just curious to know, how is this panning out, especially in light of the repeal that happened in November?
I think the repeal has not had an effect on the rates as such, and I will talk on behalf of Family Bank because we have not reviewed our rates. In fact, what we have done, we have even tried to expand even the repayment period.
Yeah.
Like for asset financing, we are even doing 100% for new motor vehicles from CIBA code from Isuzu. With an extended period of 60 months, we used to do 48 months before. Okay. Even for matatos, the organized matato in SACCOs, we are able now to finance them for a longer period, up to 80%. But the rate remains the same. What we are trying to do is to open up and to support these SME more, but not, we don't have a key interest on raising the rates.
Okay, I see. Maurice?
Okay, the way we have responded to that is that actually we even have more appetite to grow our business with the National Bank. We have most recently opened up a branch in Gikomba. We also opened Lodwar. We have opened Wote branch. We have opened Nanyuki. So much as, you know, the capping has affected our bottom line, the issue is how can we be able to grow the net. We have opened up more products for our customers to see whether we can have more of them in. We do business, and then all that is going to be sorted out. So for us, the outlook is looking even brighter, especially when you look at SMEs. We have recently opened Gikomba branch. Yeah. Gikomba branch is, you know, taking care of the Mitumba customers. We are keen to move into that space because we know there is a lot of value when we support the SMEs, and what we could have lost on with the capping of the interest rate, we get it from adding more business to us. So for us, it's a positive outlook, and we are garnering for more business.
All right. George?
I always find bankers very diplomatic when it comes to pricing, you know. They're almost very guarded, you know. They want to discuss it, but I think the truth is that they're actually pricing them upwards now, especially since November. I'm very sure that if a customer is very risky, you'll not price them at 13%. The discussion now is, can we add a small premium to compensate for pricing? So in my assessment, pricing for me, it's a big issue, yes, but I think the focus should be more on the value add from the banking side. Yeah. But I wanted to, before I forget, I want to touch something on the interplay between capital markets and the banking side. Yeah. Today, our financial markets architecture is more bank-driven, and when we talk about finance today, we talk about banks.
Yes.
We predominantly talk about banks, especially SME financing, but I think we also need to talk, there's an interplay between banks and capital markets, for instance. Sometimes the solution for an SME is not debt, it's not bank debt. Sometimes, and we talked about formalization. Now, sometimes when you bring in an external investor, especially early stage investors, venture capitalists, angel investors, they can also help with formalization, not just the banks. And for me, I think banks and capital markets in our architecture today, they're competitors to a certain extent, but they also play a complementary role. Banks are very good at risk assessment, and they can pass out. There's nothing actually, for instance, stopping banks from having a corporate finance desk to assist SMEs, SMEs that they think do not need bank debt, but actually can do with an equity investors. And the bank can have a desk to help SMEs identify potential equity investors, you know. I think that takes them to the capital markets. And there's nothing stopping banks today from doing that. And even investor readiness that I also do a lot, they can bring in external consultants to help the, I think banks, sometimes I find banks very selfish when it comes to getting these SMEs ready. Everything they do is just to advance their own interests.
But George, to be fair, and not that I'm speaking for banks here, having done a bit of transaction advisory, I'll tell you that when many equity investors come into this market, first of all, they want a particular ticket size. Anything below $1 million, I mean, they have no business. Now, when you look at SMEs and the kind of credit, the kind of capital they would need, it's really small ticket. Yeah. So that's a separate conversation, perhaps for a different day.
And I tell you that there are also
perhaps
there are also investors with a particular ticket range.
Yeah.
You know, you got guys looking for above $1 million, but you also have people. I've come across people who are just looking for tickets below $1 million. Okay. So there are a group of people like that.
I see. I want to hold that at that, and we focus on SMEs here. The issue around listing on the CRP is something which many SMEs have raised with us. if you could speak to this matter and how this is particularly done.
Yes.
Yes.
Maybe, Julian, it is good to understand about listing because we have positive and negative listing on CRB.
They seem to only see the negative.
Yes, we always discuss
SMEs
negative. We don't discuss about the positive. And I think we need to move to a point whereby we should push to have that banks make decisions based on the positive listing in terms of pricing, as we were discussing pricing before. Or the negative listing, I think it's also a good an eye-opener because me as a banker, it gives me an option of advising the client what to do in the future. Because we have seen so many clients who have been listed before, but they come to us, they even don't know, and others have been listed by mistake. And when we have a discussion with them, we are able to give them solutions on how to get out of the CRB listing and everything. And after that, they get some good financial discipline. You know, sometimes some of these SMEs will even give checks without remembering the day they gave a check, and then it goes to the account. Those small things will get them to give them a negative credit listing. So I think it's a key thing for us to use that positively, not very negatively. Even for the customer, they should not fear about CRB listing. I don't think it's a warrant of arrest because it's something that you can be able to solve.
But it seems to be a very big deal, especially from the banking optic. First of all, how is the verification done? If I come to a bank, I'm an SME, and I'm being told your CRB listing doesn't look very positive, how do I verify that actually it wasn't a mistake?
But let me interject.
Yeah.
When you talk about listing, are you talking about corporate listing or individual listing? Are you talking about the directors being listed or the business being listed?
We are talking about entire business because even the directors are listed.
Because they understand listing today is that the credit reference bureaus, they list, they provide scores for individuals.
Yes.
Right, but not businesses because the businesses are done by the credit rating agency.
But even I'm a director in the business,
then. For the directors.
Yeah.
Yes. But which is a bit of a puzzle for me for banks. How does the score of a director get into business? Shouldn't you analyze the business separately on its own merits, cash flows, balance sheet?
Maybe, George, it's a bit hard to separate the business from the directors, especially the micro and small that we're talking about.
Yeah.
Because you find that maybe it's Motiga and Mrs. Motiga who are directors.
Okay.
So most of the time we analyze Motiga and Mrs. Motiga first.
Okay, what happens with the CRB listing? It actually brought in some sanity into lending for people who would hope from one bank to the other, knowing very well the other bank would not know what lending has happened before. So it brought in some sanity, and everybody knows if he's a defaulter, he will not go very far. But what we are doing to make sure that we cushion our customers in listing from a national bank perspective, if somebody gets into arrears and we can see the loan is struggling, we call the customers and tell them that actually your facility is not trending very well, and we would not want to push your name to the CRB listing. So we are doing it professionally. We are not just going to, list customers and then later on they find that you have gotten into that level. So internally we are making sure that we do it prudently. And getting listed sometimes, as he has mentioned, there is a positive listing and there is the negative listing. If you have been clearing your facilities, what happens when you go to the next bank? They even have more appetite to deal with you. So on one side, if it is a positive listing, it works for you. If it is negative listing, there is a process to make sure that you get yourself out of it.
But many, and for the sake of our viewers, George, just go.
I think for me, credit reference is a pricing tool. And what the bureaus tell you is I believe that's how they work, is that if you have an X score, then it informs pricing. It goes into a pricing decision. X score means that your probability of default
your risk profile
is higher or low. Now, if your probability of default is low, then I should be able to price you appropriately. So I want to believe that we moved beyond listing negative, positive. That now we are the bureaus are very exhaustive enough that they can actually give you, based on your credit history, they can now give a probability of default, which is what goes into pricing. That the bank thinks your probability of default is very high, I'm going to price you high. However, we haven't, my problem with banks over time is that they've not utilized referencing as a pricing tool, which is one of the biggest outcries. When you remember the rate cap came, one of the biggest outcries that the banks were not utilizing referencing as a pricing tool. You know, and when the president signed it off, well, I hoped that one of the things that would come out is that risk pricing will become a centerpiece, because risk pricing is where you get it right. And I hope we won't get back to a situation where we are having a rate cap again because banks have failed to price you on risk. Banks today price you on different metrics, but not risk.
I see. Maybe before you respond to that, and just for the sake of our viewers, what's the process of, for example, I've defaulted.
Yes.
At what point am I put on that list in the negative sense, just so that at least the viewer understands?
Yes.
Maybe I'll receive a call once, twice, thrice, then I know now I'm in a terrible situation.
More proactive financial institutions will also tell you the repayment dates. Maybe sometimes some of these SMEs, they are busy, to remind them that your loan is falling due, maybe by next week, so that you can plan how to repay. And maybe after that you are not able to pay, they also follow up with you on calls when they have good relationship management like we have in Family Bank. And with the time, after 30 days, 60 days, maybe that's the time now we need first of all to understand what is happening, why you are not able to pay. We just don't go list customers without understanding the process, because there are so many other solutions that we can offer, including rescheduling, restructuring the facility, and also, and nowadays I think we are more proactive in such areas. We don't rush to listing customers. In fact, for you to be listed, you must be quite indisciplined, that you're not even be able to be reached on phone. Maybe the business where you're operating, you moved out. So you are skip trace. We are not able to trace you wherever you are. And maybe by the 90th day, we don't have another option but to list you.
Okay.
But our key issue is the relationship management. We want to grow you. So what can we do to the business? We can even give you more credit so that we can be able to take you back to profitability, maybe if the sales have gone down.
I see.
Yes.
And I noticed you mentioned by the 90th day, so that indicates now 3 months, then
Yes.
that happens, huh?
Yes.
Maurice?
Yeah. So by the time you get to the 90th day, a lot has happened just to make sure that we cushion you and we make sure that we let you know what is happening. We also look at options as to why the debt is getting to that level. Is it that the market dynamics have changed? Is it that funds came into the business and they never went to the intended purpose? Is there an opportunity for us to extend, restructure the facility to make sure that you go back to good books? So by the time it's 90 days, we are serving you the demand notice. That tells you that actually the bank has really tried to cushion you.
I see. And George mentioned something around risk profiling and pricing of credit. And I'm just curious, I know the day that the interest rate cap was repealed, Joshua Oigara, in his capacity as KBA chairperson, told us that we don't see it going above 16%.
Yes.
I'm just curious to know, and I really have to ask this question, how is the uptick looking like?
Maybe just to mention something on what he said, that we are supposed to use CRB listing or profile to price our assets. But I believe there are so many other reasons. There are so many other factors that we consider before we consider the price. Because apart from the risk, you also look at the prospect of the business. What kind of sector you're operating in? What are the future cash flows looking like? So I think that's just one part we need to consider. As what we are projecting not to go above 16%, I believe even that was quite high, because I've not seen any bank which have gone above 13.5% so far. And I think, I don't know whether it is wait and see, but I believe...
Who's blink fast?
I think there's one of the banks which was who rushed to raise the rates, and they withdrew immediately. But as I said, as Family Bank, we are not keen on any raising on pricing, but we are keen on seeing how we can reach to more SMEs. We are keen to see on how we can go to more sectors that we are not going to. We are keen to go all the villages where the agribusiness people are, where all the transporters are, where all the traders are, so that we can try to see how solutions we can be able to offer to them.
Maurice?
Okay. From an NBK perspective, our reference rate is the central bank rate. And since it recently came down, we are pricing our facilities at 12.25%. So we want to do more business within the SMEs. We are aware that, interest is a subject of concern to customers. But for us is that we also need to make sure that we take care of our margins so that we don't find ourselves underwater. But every time the reference rate goes down, we are compliant as we speak.
I see. George, any views on that before I go to the next point?
Well, I think for me, price should not be, it's not a proposition anymore in this market, yeah. And I think that, well, what he didn't say is that when the reference rate goes up, what do you do?
It will definitely go.
But that applies for existing facilities that existed before November.
Yes.
What happens to new facilities? How do you price new facilities? Yeah.
Yes, we're pricing the same. We have not changed much. As he said, we are regulated, so we have not seen anyone trying to do different things.
I see. And I beg to go to the next point. And in yesterday's session of the SME conference, one of the issues that was emerged and really spoken about by CS Fred Matiang'i was that there's a lot of disharmony across the counties, such that the more you're going across counties, you have cess, you have levies, you're being slapped with as a business person. By the time you get into your market, essentially your profit has been wiped out through this kind of levies. And SMEs were saying that now the more your route to market traverses various counties, the more unviable you become for credit, because now banks are really shy around this. I'm curious to know what you'd say about this, especially focusing on the devolved space.
I think what Dr. Matiang'i was alluding to is quite true, because if someone is transporting his wares all the way from Kinangop to Mombasa, maybe some potatoes, you'll find you are going through about maybe 5 or 6 counties, and each and every county there's a cess, there's a levy. And from where you are coming from, you have paid some licenses, and where you are also delivering, you pay some market fees. So it becomes quite expensive for these SMEs to do business locally. And I believe what the county government said, and I think Matiang'i alluded to it, that they are working together to reduce those levies and to harmonize so that the cost of doing business becomes a bit cheap. And as I said, I think everything is now on the government to create a good environment for business. Because I think as private sectors, as these do occur, as business people, SMEs, we have done our part. The only thing that we need now is the next, what else can the banks do for us? What can the government do for us? Because as you said, if you go to a county in Mombasa, you'll find different levies. If you go to another county in Kisumu, you find the levies are totally different. How can they harmonize so that it can be on the level playground for doing businesses?
But Mutika, do you think it's a fair point that the SMEs are raising, that the more you traverse different counties, it really actually affects your risk profile in terms of the bank looking at your business for credit extension?
No, for banks, we don't see, there's no risk on that on our side, because what we see, how we treat a customer in a certain county in Kisumu, because our branches are over, it's the same we treat a customer in Mombasa, and the credit policy cuts across. Okay. So on our side, we don't profile this county better or the other worse than this.
Maurice?
Actually, what happens is that we know each and every business needs to grow. And when we see an SME moving from one county to another county, it tells us the triggers are moving towards the right direction, the business is expanding, they need more funding so that they can be able to cover a bigger ground. So for us as National Bank, we look at this very positively. This is a business expansion, and business expansion, we need to find a solution around it. Most recently, we came up into a partnership with Hinot, subsidiary of Toyota. And one of the needs that why we went to Hino is because most of our customers are telling us they are having actually that problem where they want to move from one county to the other. For us being a listening bank, what we have done is that we have gotten into a partnership with Hino, and we are financing 100%. What will this do? We'll make the customers even move further and further. So what we are saying actually is the reverse of what you mentioned. We have more credit appetite for customers who are diversifying into new markets and are actually expanding.
I see. George, on this issue of the devolved units?
Well, it has come with its own teething issues. But I think things like SES have always been there. Even if you go with the old municipality system, the local government system, they've always been there. I think for the key thing from a risk perspective is how are they able to pass on these costs such that it doesn't affect their ability to service their external financing, whether it's debt or equity. I think that's the key thing.
I see.
Are they shielded enough? Can they pass on the costs to the consumer? I think that's the key analysis that should go into that.
Okay.
Yeah.
We were looking at a scenario yesterday in one of our conversations at KICC, and one of the things that was highlighted is that there are instances, and I know being the free marketeers you have already pronounced yourselves to be, you might likely shoot this down. There are instances where we have seen governments saying the loan-to-deposit ratio has this floor, yeah, and this is essentially just to push money, especially to the SME segment in markets where it seems to be stifled. Just curious to know your thoughts around this particular view as a way of boosting credit to SME.
Are you talking about Nigeria?
Correct.
Well, I think that Nigeria has been dealing with a different problem, that for a long time, as the regulations have been made more soft and comfortable for retail lending, banks have still failed to take up the advantage and extend credit. And so the central bank came up with this drastic measure, including a minimum loan-to-deposit ratio, and even including controlling, even sanctioning some of them into the treasury bills market. And if you can remember that they're very careful. They're very keen. The central bank is very keen on the auctions. Yeah. They're asking, can we see a pipeline of who's buying these treasury bills? It's just a way of trying to force banks to be efficient with liquidity, in my assessment. And I don't know how far they'll go with it. But banks are very innovative, I can tell you. They have so many ways of navigating that. But in the context of Kenya, I've always thought that the 3-year period that we were in,
the rate cap
period, there was a significant liquidity build-up for the banks, and they didn't know what to do with it. And the only thing they could do is to buy treasury bills and treasury bonds. And I thought that's a very inefficient way of using customer deposits, especially to advance growth. In our assessment, I think similar things can actually work in Kenya. But I think for us, we have more room to play with, for instance, reserve requirements. Yeah. We could actually, if the government is not, sorry, the central bank is not seeing an uptick in private sector credit extension, then you can actually adjust the reserve requirements. Because then, if you're not using the liquidity, can we keep it for you then? If you want it, then if you want us to lower your reserve requirements, can then show us a pipeline of your lending pipeline, then we'll release some more liquidity for you. That actually is a way of enforcing credit extension. Otherwise, I think we could actually do with some of those, borrow some of those moves. They're not drastic, but in extreme scenarios. I tell you what, if you look at the monetary policy environment today, it's very accommodative. Yes, in Kenya. It's very accommodative. And what's the signal is that we want credit to flow. Exactly. Yeah. But is it flowing? It's not. I don't think. I haven't looked at the latest data. But the economic capacity to take in more credit is probably constrained. Yeah. So I don't know to what extent that monetary policy, the current monetary policy stance will work, and the bankers could tell us something different. But I think that the economy is looking a bit more tight right now to take on more credit. We've seen corporate disclosures, shutdowns of businesses. A number of corporates have cut down on production capacity, no borrowing for capex. So it just speaks to macro environment largely. But I think if the macro environment was very stable and banks are being funny, then you can actually import some of those drastic measures. Okay.
And Mutika, on the same, before I switch on to that macro conversation, actually.
I think, as I said earlier, it's quite difficult for the government to control which sectors that banks are going to finance. Yes. But maybe who they can control, maybe so that you can have a lot of funds channeled to SME, is to put a regulation on how much banks should be able to invest in treasury bills and treasury bills, so that most of the funds can be channeled to the SMEs. Maybe that can come in to support more liquidity to give to SMEs, and especially to these Tier 1 banks. But I believe some of these Tier 2 banks, like Family Bank, I think we all channel all the deposits and all the funds to finance the clients, and especially SMEs and also on the retail sector. The sectors that we operate within are the sectors that we find they are more viable for business, as long as are within the law. Correct. So sector-wise, I think we have been quite huge in agribusiness. The government can also try to lobby maybe the banks to do more on agribusiness, so that all of us can go there. But ideally, I don't think the government can be able to regulate on which sectors that we are going to lead.
Maurice?
Strategically thinking is that if we, put in more regulations again, they bring different dynamics to play. But if I can speak in terms of National Bank. National Bank is very keen to support the SMEs. 2020 strategy, our customers are coming first. So before we look at other options is how we can be able to fund our SMEs to grow.
I see. And of course, we know that, I mean, there was a capital boost from KCB earlier this year, 5 billion shillings, so we really look forward to that. Yeah. I want to talk about the macro environment and how this is particularly affecting the SME space and the accessibility of credit for them. We are in an environment where, on the one hand, of course, the government is reporting very robust growth numbers. But if you look at the reality on the ground, the narrative seems to be very different. And there is this decoupling between the two. Let me start with the bankers, because you're the guys who are extending credit. How is this influencing your lending, especially to SMEs, when you look at all these profit warnings, all these liquidations happening?
Okay, these are definitely, it spans into the economy, and we are seeing some effects to it. But the truth of the matter is that we are seeing the GDP projection for Kenya getting to, in 2020, to about 5.9, having come from 5.7. So what we are seeing is that there's going to be growth within the GDP. And looking at the drivers of the GDP is SME in there. Yeah. So as much as we are seeing, different triggers within the market, if I just focus within the SME space, is that there is growth that is projected. We want to be in the sectors that we are seeing the growth being projected within agriculture and manufacturing being the top, so that we make sure that we fund the growth of the economy. Strategically, that is the view we want to take.
I see. What again?
I think the economy is projected to grow, and I think also the government is coming out very strong to support SMEs. You remember yesterday Dr. Matiang'i says that he's going to come today with about 6 yeses so that they can be able to address all the issues that SMEs are talking about. So even other banks, I think all the banks I've seen, they are coming out to support SMEs in a big way. You have seen also banks merging. We have seen competition becoming a bit stiff on this small sector of SMEs. And all these, with the regulation of central bank, it focuses on creating a good environment whereby you can be able to support SMEs to grow this economy.
I see. George?
Yeah. Well, I think the decoupling that you're talking about, it speaks to, fundamentally speaks to the weakness of GDP as a measure of household economic well-being. Remember, GDP is an old post-war economic statistics that existed when the global economies were still in the cottage, where economies were measured using physical counting. How many glasses have you produced? How many vehicles have you produced? But economies are getting more lighter and lighter, right? How do you, for instance, factor in things like financial innovations like M-Pesa, the fact that you can actually deposit money into your family bank account on your phone instead of taking a matatu, going to the branch, and physically filling in a form. So there has to be there's some significant impacts that has happened. But I think, back to your question, when you talk about the macro environment, for me, the key thing is also the fiscal space. Yeah. Today we are talking about pending bills of about north of 100 billion shillings that from both the county governments and the national government. Yeah. That has a big impact, because if you look at SMEs, even a simple SME is like a supplier. It's not just the SME. When you are a supplier, you have probably 2 or 3 businesses behind you as a supplier, including your landlord, who has his house as a business. So all these things, when you have a pending business, all these things have a ripple effect that go backwards. Yeah. But I think at the core of it is the fact that the government, we are dealing in a very fiscally indisciplined government, and you talked about things like fiscal, I don't want to call it corruption, I want to call it fiscal pilferage. So when it's corruption, essentially. We're dealing in an environment where we have significant fiscal pilferages. And look at some of the economic statistics. Look at, for instance, the core inflation. It's been below 5% for a long time. It speaks to a very weak demand side.
Yeah, correct. Correct.
We're talking about a current account deficit that is going below 5%. But we're not talking about it's on account of decreasing imports, not growing exports today, right? So look at those things and tells you the fundamentally we have a problem in the economy, and that needs a check-up. And I think for me, I don't know how I was look at the latest statistic on demand, credit demand, and it's very weak. It's still very weak.
But it's picking up.
It's picking up slowly. It's picking up slowly. I think for me, the government, we need a fiscal intervention on the other side to prop up the economy.
Okay. Yeah. George, let me hold you to that point. I'm told my colleague Mel Miendo is at the DCI headquarters where Justice Sankale has just been presented again. Mel, what's the latest from that end?
Julians, we're expecting that any moment from now, Justice Sankale Ole Kantai will be brought back here at the DCI headquarters. You remember that on Saturday he was released from police custody at the Muthaiga police station, and that was on a free police bond, and he was required, actually demanded, to come back here to the DCI headquarters today from about 9:30 a.m. So we are waiting to see just who Justice Sankale will be coming with. Perhaps his lawyers will be flocking here as well, and maybe perhaps judges and all magistrates as well. Actually, on Saturday when we were here, we saw some of those judges here, perhaps in solidarity with Justice Sankale Ole Kantai. They were here together with the lawyers, but one of the lawyers who we actually saw at that time, Nelson Harvey, will not be coming today, but Justice Sankale will be with other lawyers. So we wait to see just exactly who they will be. Remember, Julians, this is all about the Tob Cohen murder case, and Justice Sankale Ole Kantai is a person of interest, especially with regards to his interaction with the main murder suspect, and that is Sarah Wairimo Cohen, who is the widow of Tob Cohen. And so detectives have been questioning Justice Sankale from when he was arrested, that's on Friday, and then also on Saturday he was taken into police custody, and then he was released up until today when he is expected to come back here to the DCI headquarters. There's also expectation that he may be taking plea, but what I can confirm is that he is actually in the expected charge sheet because he is a person of interest. Remember, in the charge sheet that we saw, especially last year when the case was in court, we saw Sarah Wairimo, there was also Peter Karanja, and now the third person who has been added into that is Justice Sankale Ole Kantai. So we wait to see just how that will be, whether he'll be taking plea at the Milimani Law Courts or whether it'll be different given that he is a judge. It's a lot of dynamics, especially with the judicial system that we know of here in Kenya. So we wait to see just exactly what will happen. But we are hoping to see Justice Sankale here at the DCI.
Many thanks, Mel Miendo, for that update on the DCI, and that's a story we are keeping a close tab on. We've been discussing SMEs this morning on the set, and we want to get to our closing remarks. And just before I get to our closing remarks, there's a comment on Twitter that banks should not be allowed to be discussing parting of SMEs because they are the ones who, during the rate caps, were pretending that they cannot lend to SMEs, yet it was just a matter of lending to the government. Maybe respond to that as you give your closing remarks.
Okay, from where I sit, I think I look at it differently. We have always been in the market to cushion SMEs with financial solutions, and during the capping, nothing much changed from a national bank perspective. We were there for SMEs and will always be there for you. Looking at my closing remarks, if you allow me, we are asking our SME customers to seek solace within National Bank, because within National Bank we are keen to support you through and through. We have decided to walk with SMEs, go through the journey with you. In the event that you have no security at all, we have extended an arm of lending to you on unsecured basis. And if you have security and you're looking for working capital, we can also charge your property and move on with giving you the, both short-term and long-term financing. If you're looking for warehousing, can be able to do business mortgage and be able to get you a warehouse. If you want to move your products, we'll be with you. With currently having signed a partnership which is 100% with Toyota. Come on board and we are ready to serve you.
Thanks, Maurice. We'll take your closing remarks.
Thank you, Julius. As my colleague said, maybe the gentleman who talked about financing, he needs to come and visit Family Bank, whereby we are able to offer all solutions for SME. Currently, we are able to offer asset financing 100% for zero mileage vehicles. This is all the trucks either from Court Motors or Isuzu East Africa, and we'll be signing an agreement with an MOU with Court on Thursday, whereby we are financing all our business people, schools who want these trucks for transportation of the kid to school. The people that want some trucks to transport their goods from point A to point B, 100%. 95%, even for matatus, we are financing up to 80%. Welcome them to come to and see us. Over the other issues that we also have working capital. All the customers that are in traders, we are able to offer biashara boost loans that is up to 5 million unsecured, as long as they've been in the business for more than 1 year.
I see.
Yes. Thank you so much.
George?
I think for me, when I look at the SME financing, I think the number of supply side restructuring that can happen, and banks and these two gentlemen here, they just represent for me one equation of the supply side. I think there are more other things. We have the capital markets that we can see how we can drop into it. We also have the fiscal intervention from the government side that can actually help. We also have the unregulated market that also is a big source of financing for SMEs. How can we bring them on board into that purview of regulation? And talked about 180% on an annual basis, which is very, very high. How can we bring this, all these guys into the purview of regulation? So I think for me, it's a very holistic approach.
All right.